Test, test, test. Okay, here we go. Apologies. I am up and running now, so a short delay in starting today's live trading key trading levels and trading setups for popular markets. My name is Phil. I'll be your presenter today. So I'm just going to go and check that this is all streaming okay. I can see that this is all okay in here, and it should all be okay there as well. Yes, starting today's Okie dokie. Okay, hi and welcome to another edition of Midday Live Trading by TraderCast. My name is Phil. I'll be your presenter today. For those of you who haven't seen this before, if you're looking for the community, check out TraderCast.com. If you're looking for the education and you're brand new, you can check out mytradingskills.com. Some of our courses are completely free, and at least you'll get a flavor of what we teach, how we teach, and if we can help you out. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I had the privilege of teaching many people how to trade. Some of them were brand new, some of them were people who needed help with a specific area of their trading. Big disclaimer now, these are my opinions and experiences only. Basically, this is a practical application of what I firmly believe a novice trader should be able to do. So what I'm doing here today, and what I've been doing over the past a month or so since starting this, is basically using a very simple price action trading. It's not strategy, it's trading process, which is trend following, that I believe disciplined traders should be able to replicate without too much hassle. No complicated indicators, no specific strategies per se, just a basic trend following price action, and that's where I am. So these are my opinions and experiences, and since we are talking about some live trades and key trading levels that I'm reacting to, this is what I have currently open. So for those of you who watched yesterday's session, you know I was still a long sterling dollar. So this is the old trade, and you can see that I've moved my stop loss at break even. This position was in the profit by a bit, and I thought, okay, it's not really playing out, and I'm going to do the same thing what I did with euro dollar a couple of days ago. So I moved it break even, and I got stopped out with nothing. I'm also long WTI crude, still from 94.20. I was toying with the idea to take some partial profits around 100, but when I saw the breakout and the retest, I decided to leave it. So I'm really happy with this trade. I'll show you all of that in a bit. I'm also long gold. This is all from day before yesterday. I closed 1/3 of my position at 1969. If you remember, I was looking at 1970, 1975 area, and I still have that position open. And I also initiated short S&P in the afternoon. We talked about that setup. The first retest of that level, I missed it. I did not get in on that trade, but the retest of that level, I was really happy to short, and I've been short ever since. So happy with these trades currently. Okay, so let me just show you where I am with a couple of those things first. So the cable trade, this is where the cable trade ended up. So the cable trade looked like a downtrending market, and I was looking for a breakout to the upside and then potentially to take profit up here and maybe look to short up there again. So this is what I was looking for. Rally, counter trade, and for another short sell as well. What happened is we had a short-lived moves, and then subsequently loss of support, poke higher, a loss of support, poke higher, a loss of support. It really does not make sense to be in this trade anymore from a counter trend point of view. This can very easily carry on to the downside and have another leg lower. So this is what I've decided to do. Get out of this trade and reassess everything, and then decide on what I want to do. So currently I have nothing open in sterling dollar. I would like to see something like this, an oversold rally and a breakout above 130 40, 130.30 area, and then a retest like that for another leg higher, and possibly another move towards this falling resistance trend line towards 132.20, 132.30 or thereabout. But so far this is not playing out, so I'm just leaving it as it is, keeping an eye on it. And yet again, bear in mind you have Easter coming up as well, and markets will be closed. Liquidity is going to become very thin. Lots of traders are moving away from trading desks, looking forward to an extended weekend, and that's where we are with cable. Okay, so from the other trade that I had open, you saw me take partial profits in gold. And I'll show you what I did with gold. So gold, I was looking for a breakout to the upside. The level that I was looking at was at 1948, 1950. I saw this as a breakout and a retest, which then created this coiling price action. 1, 2, 3, 3 touches on the upside, breakout. The breakout, the widest point of consolidation added at the breakout level, gives us this area up here towards 1980. Breakout above that level, possibly 1990, and then 2000 on the upside. So what I'm seeing here at the moment is I'm seeing the existence of newly formed trend line, which is this one here. I've decided to take partial profits on this trade, and I would be paying a very close attention to the loss of 1970. So a dip below 1970 and end of day close below this area here could possibly open the way for a deeper retracement, and then I would like to close my long trade and get out of it. Otherwise, if we see a corrective pullback to this area here and then a rally from there in a shape of something that could look like this, so pullback and a rally. Let me just delete this. So I'm just changing the time frames now to 1 hourly again, so something like this, pullback and then a rally from here. This would be a very good level for people who are not currently in the trade, who might be looking to engage around 1970. Most of the people who are looking to do that would be putting stop loss around 1960, so $10 in price of risk for the potential extension towards 1990 or even 2000. So 2 to 1, 3 to 1 risk to reward ratio for gold, and that's where I am with that trade. I'll show you that trade right now. I'll show you how that looks in my book, and I'll manage the stop loss and tell you where I am with that at the moment. I'm keeping an eye on S&P ahead of the open. I really want to talk to you about that as well, because that could be setting up for a partial profit taking now. So here we go. This is, come on, sorry, apologies. Here we go. That's a gold trade that I was telling you about. I had a larger size, so I had about 30 contracts, plus I was long 30 contracts, mini contracts. These are mini contracts, and I cashed in I cashed in 10 out of them as well. So what I'm going to do right now is, instead of taking profit here again, I feel that gold could possibly pop and move higher as long as this rising support trend line holds. So what I'm going to do now is, instead of taking partial profits, I'm going to move my stop up here towards 1964 half, 1964 half, call it like that. And I'm going to leave that because I'm going to lock in another 15 and a bit points, or around 300 euros on this trade. So if the price does go against me and breaks through that 1970 level, I would like to still be in that position, but if it breaks through 1965, stop me out and get me out of this position with the profit. So my stop loss is now well above entry, and my stop loss is also take profit. My ultimate take profit is up here towards 2000. I had other take profit area kind of higher, but let's keep it at 2000 for now. 1990 would be a partial profit taking opportunity, and then 2000 as well. So risk to reward ratio very good. I got paid already once with this trade, and I'm leaving this running for now. So nothing changing here with gold. So still happy to stay in that trade. I'm going to show you S&P, and the reason why I decided to go short S&P, it's this bit here. So yesterday, if you remember, I was looking at oversold bounce back, and then we painted a fib retracement of 61.8, and then we also had horizontal here, and we also had a falling resistance trend line. So I don't want to be confusing anybody, but this was that multiple layers of evidence approach that we were talking about, and what I was looking for this and then a reversal, which is what I got at the moment. So it's coming to these lows. This would be a good time to take partial profits. Okay, and what I'll do is I'll do that very quickly now, because we are coming to a US Open. I wouldn't be surprised to see a possible oversold rally of some sort. Yesterday I was looking at the first touch here, and then I saw this reversal of bearish engulfing. I was busy talking, and I did not jump on this trade, and then I got a second chance to get on this trade when the price went up here and then reversed. So you have bearish engulfing here, and then you have evening star reversal with this 3 candle, and then you also have a reversal here. So you have a multiple shoulder, head and shoulder as well. So shoulder, head and shoulder there as well. Shoulder, head and shoulder with the neckline and the retest. So there were a number of areas where disciplined traders could get the trigger to be filled and get a short on this trade. So let me just show you all of that right now. The trigger was inflation reading in US showed elevated 8.5%. This was higher than what market analysts were expecting, and the equities initially rallied on that news, and then eventually, when the US markets opened, we saw a correction and retracement from this oversold rally into that 44.60 area and so on. So there is the trade. This is where a trade was initiated. I have a fairly decent size on this trade. This is the 4-hourly time frame, so that you can see the existence of the trend. If I go into an hourly, you're seeing this reversal, and if you go into a 15-minute, you can see where the trade was initiated. So this was the first rally and a bearish engulfing. If you remember, I did not react to that. I was too late. I was talking, busy showing the audience some other setup. I don't know what we were looking at the time, maybe crude oil or something. But and then I got about 45 minutes later, maybe an hour later, I got another opportunity to get in, and I decided to do that with a tight stop and so on. So now what I'm going to do is, firstly I'm going to move my stop well below my entry. So I'm going to lock in some money on this trade. Now we know that this is the cluster of the lows, and this is the cluster of the lows here. and this is the retest of that, and we have US markets opening in about 4 minutes. So what I'm going to do right now is, firstly, I'm going to close partially my position. So I'm going to take 30 contracts, 30 contracts out of this position, and I'm going to close it and get out of this trade. So here we go. I'm going to take this money, and that's a partial close. You can see that my position size was reduced from minus 50 contracts down to minus 20 contracts, and my P&L is reduced as well. So what I'm going to do right now is I move the stop loss at this neckline here. I would like to move it a little bit lower again, down to here, and just pay attention to this. If I see an oversold rally towards 44.20, I'll still hold it, and then see if we can get more to the downside. If I see a loss of these lows and then a big selling pressure and then reversal from there, I might choose to get partially out of this position again or something like that. But so far, from the risk to reward ratio, I'm really happy. I'm locking in 27 points on top of the ones that I've cashed in, and I want to see if this selling pressure continues, and if so, I would like to stay in this position. So that's my S&P. And the other position that I have, sorry, let me just see if this is all open. Yes. Yeah. The other position that I had open was WTI crude, or crude oil. I was long, and I initiated that long live during the session a couple of days ago. So for those of you who watched the session live, they saw the reason why I decided to go in, and I was paying attention to $100 per barrel, which is this $100 per barrel, this area up here, nice and round number. And then what happened is we saw this massive a breakout and a retest. In my book, that's now very, very bullish. That's very bullish for a couple of reasons. So we have these highs here. So this was a previous resistance, now a newly found support. So we have these lows here, and then we also have these highs. So this was the high and the high, and now we are seeing the breakout. So this is the support down here at 100. So previous resistance at 100 is now newly found support, which is this area up here. So potentially I feel that this can go towards $105 dollars per barrel, as long as this rising support trend line is respected. So how can somebody engage with this position again? Well, like this. So we're seeing consolidation, breakout, consolidation, breakout. So all of this becomes a breakout and a retest. There's a mini version of this in here. Now, potentially we could see a corrective pullback towards 100, and then from 100 we could see a rally to the upside towards 105 or thereabout. It's not exact science. Now, this is the previous consolidation, and this is the highest level of the breakout. If I add that at the breakout level, that gives me this zone up here of $104.50 towards 105, which is a nice and round number. If I go and change the time frame and look to the left, I can see that this is tested before here and here and here and here and here. A little bit of consolidation here, definitely consolidation here. So that level is actually quite important level that has been challenged before, either as a support or resistance. So I'm keeping this open, happy with this trade, and the only thing that I'm going to do is I'm going to move my stop and wait and see if I can get more out of this. Apologies, more out of this trade. But really, really happy with this trade. Really, really happy with this trade. This is a good trade. This is exceptional trade. I really like it. It was a good level to get in. It was a good reason from the fundamentals. It was a good reason from the technicals. You know, either way I look at it, it was a good trade. I was happy the way I managed it. I was happy the way I controlled my risk. So really happy with this. Really, really happy with this. Okay, so there is crude oil. So crude oil, oops, sorry. Crude oil. And if I change this to 4 hourly, you can see where the entry is. So there is the entry now. This is the running P&L. So really good, really good trade for me. This is 10 mini contracts or one standard lot size. So it'll be $10 per point or 10 euros per point or 10 pounds per point depending on the account. So US crude should be traded in US dollars, but my account is in euros here. So really happy with this trade. It was the right entry. It was a perfect entry. There is that hammer formation that I keep talking about from the very simplistic confirmation of the entry, and off we go higher. From the hourly point of view, happy with this trade. So we have low, higher low, higher low, higher low. There is that consolidation that we talked about and a breakout. What I'm going to do right now is I'm going to move my stop closer to 100. Actually exactly at 100. So I'm going to lock in 582 points on this trade, or 5,826 euros. So I'm locking it in. If the price goes against me, I will be stopped out, and my stop loss is my take profit as well. My take profit on the upside was at 104.20. I'm going to move it to 105 now and leave that running. So risk to reward ratio really good. I feel that I'm not carrying any amount of risk at the moment. There is unrealized profit. Well, there is always a certain amount of, you can get a slippage or you can get something unforeseen happening, but I'm keeping it open, happy with it, and leaving it open for now. Really happy with this trade. I think it was a textbook entry, textbook risk management, textbook reward to risk ratio, and so on and so on. So woo, look at the Dow. Here we go. S&P is actually bouncing off at the open, bouncing off gold. We have crude oil here as well. A little bit of movement in cable. Dollar yen lower, euro dollar lower. For those of you who were watching euro sterling, you can see the euro sterling is pushing a little bit lower now as well. But all in all, very good, very good so far. Is there anything else that I would possibly consider doing at the moment? Well, this level here was actually good for Dow. So this level was actually good for Dow. Again, Bit too late now. But low, low, low. High, lower high, lower high. So what counter trend bullish setup could look like could be like this: a breakout and then retest for another leg higher. So something like that could possibly trigger. But let's see. Let me see if is there anything from breaking news. 5 things we need to know before we start trading. Okay. Let me see if is there anything. German government spokesman: the German government rejects the EU ban on Russian oil for now. Russia's deputy foreign minister, Russia is open to dialogue with American businesses. And it's also open to dialogue on strategic issues. On the back of Chinese COVID-19 lockdowns, the IEA reduces global oil demand forecasts for 2022 by 260,000 barrels per day to 99.4 million barrels per day. German economic institutes reconfirm cut 2022 GDP growth forecast for Germany to 2.7% versus 4.8 previously. 4.8 previously. Very little here to talk about. So S&P is moving higher. S&P is moving higher. Okay. It could be the time maybe to look into that trade again. We can't blame COVID lockdowns for China surprise import contraction. Kremlin, it categorically disagrees with US President Biden's description of what Russia is trying to do in Ukraine as genocide. US equity futures slightly off the lows as JP Morgan Chase and Company fell in pre-market trading after reporting lower than expected quarterly revenue in its investment banking unit. Eurostock 600 index slips with retailers leading declines as Tesco plc warned profit will be squeezed due to UK's cost of living crisis. UK inflation surged to 30-year high before the Bank of England next decision in May. New Zealand Central Bank delivered its biggest interest rate increase in 22 years. Markets continued to digest today US inflation data, which prompted traders to pare back expectations on how aggressively the Federal Reserve will rise interest rates. Among notable pre-market moves, GlaxoSmithKline agreed to buy Sierra Oncology. It's a biopharmaceutical company for about 1.9 billion. 1.9 billion. Okay, so that's where we are. That's where we are with some news and 5 things we should know. So I'm just checking to see if there's anything here worth talking about. Very, very little, guys. Very little. Okay, this was short and sweet. We are broadcasting for what, 30 odd minutes now. We are past US Open. I'll be back with you tomorrow for a short session again. But markets are possibly becoming a little bit of a little bit slower to react to news. I can see the market participation is also slower than normal. Liquidity is slower than normal. We are coming close to Easter holidays, and that all has an impact on people being away from their trading desks. Okay, thank you so much for watching and listening. Stay safe, happy trading, and bye for now. Thank you.